Welcome to the channel. Today we're uncovering the early paycheck promise and why it can fall apart during major bank holidays. First, we'll explain how 2-day early really works. Then, we'll expose the holiday trap. And finally, we'll give you actionable steps to protect your cash flow. Let's begin. Here's our roadmap. First, we'll define what early deposit really means. Next, we'll walk through the ACH pipeline. Then, we'll examine how holidays shift settlement and cause delays. After that, we'll give you a concrete action plan. Finally, we'll quiz you to make sure you can navigate your next payday with confidence. Let's start with the heart of the issue. Early direct deposit is not a guarantee. It's a discretionary decision by your bank to advance funds before the official ACH settlement. Your employer sets the pay date, but the bank controls the release time. Consequently, when the risk increases, like over long holiday weekends, banks may decide not to front the cash. With that grounding, let's walk through the actual flow of your paycheck. Here's the mechanics. First, your employer prepares and submits an ACH payroll file, often days before the stated payday. Next, the employer's bank, called the ODFI, sends that file into the ACH network. Then, the Federal Reserve's ACH system schedules the official settlement date, when funds move for real between banks. Finally, your receiving bank, the RDFI, can choose to make the money available early, before the Fed's settlement, based on their policies and risk tolerance. In other words, early access is a courtesy, not a legal obligation. Now, let's see how holidays disrupt this flow. During federal holidays, the Fed, who manages ACH, closes. As a result, official settlement dates shift forward. Moreover, internal bank staffing and batch processing may run on altered schedules. Consequently, even if your employer submitted payroll on time, your bank might withhold early access, especially across a prolonged weekend. Next, let's visualize a typical holiday timeline. Consider a late December pay cycle. First, the employer sends the ACH file several days in advance. Next, your bank reviews the file and may decide whether to front you money. However, when the Fed is closed on a holiday, the official settlement can't occur that day. Therefore, the formal posting is delayed, and the bank's exposure period grows. Consequently, some banks suspend early access until the first business day after the holiday. With that in mind, let's compare roles. Who sets payday and who controls release time? On the left, the employer's responsibilities include setting the official pay date and submitting the payroll ACH file. On the right, the receiving bank determines whether to release funds early. Importantly, banks' policies are not standardized, and they often adjust risk models during holidays, which can lead to holds or delays. Now that you know who controls what, let's move into your action plan. To protect yourself, start with payroll. First, contact your employer's payroll team and confirm when they transmitted the ACH file and whether the holiday altered their schedule. Next, verify your bank's posted policy for early access and ACH processing around holidays. These details are often tucked into FAQs or disclosures. If you have critical, time-sensitive bills, consider requesting a physical check to bypass the early deposit uncertainty. Meanwhile, building a cash buffer, even modest, can help you absorb a 1 to 3 day delay. Finally, turn on deposit alerts so you know exactly when funds are pending versus posted. Here's a quick checklist. First, identify upcoming Federal Reserve holidays. Second, confirm your employer's payroll submission date and whether it shifts. Third, read your bank's early deposit policy and any holiday advisories. Fourth, if necessary, adjust autopay dates to avoid overdrafts. Have a backup such as a physical check or alternative funds for critical obligations. Now let's ground this with the holiday calendar most likely to affect ACH. This table lists the major federal holidays when the Federal Reserve's ACH system is closed. On these dates, official settlement does not occur, which can push posting to the next business day. As a result, banks may suspend early release to manage risk exposure. Therefore, expect potential delays, particularly around long weekends, such as Memorial Day, Labor Day, Thanksgiving, and Christmas. Quiz time. The question is, who ultimately controls when your paycheck is released into your account? The options are A. Your employer, B. The Federal Reserve, C. Your bank, or D. The payroll software vendor? You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is your bank. Employers set the pay date, but banks determine whether to advance funds ahead of ACH settlement, especially around holidays. Second quiz. If you absolutely need funds during a major holiday week, what is the safest option? The options are A. Rely on early deposit. B. Open a second bank account. C. Request a physical check from your employer. Or D. Wait until after the holiday. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is to request a physical check from your employer. This avoids reliance on discretionary early release and gives you control over when funds are deposited. This sequence diagram shows message flow and decisions. The employer sends the ACH file to the ODFI, which then forwards it to the Fed ACH. If a holiday occurs, the Fed is closed and cannot settle, so the RDFI may hold early release to limit exposure. Otherwise, when the Fed is open, the RDFI can choose to provide early access before official settlement. In both branches, the funds ultimately post after official settlement resumes. Here is a concise Markdown-style recap. First, the core mechanics. The employer sends the ACH early. The bank may front funds pre-settlement. And Federal Reserve closures shift posting dates. Next, the holiday realities. Long weekends increase bank risk. Policies vary widely by institution. And early access is never guaranteed. With that summarized, let's capture the most important takeaways. These are the essentials. Early deposit is discretionary. Holidays shift settlement and can cause normal delays. Coordinate with payroll and verify your bank's policy. And when timing is critical, request a check and keep a small cushion. To conclude, understand the end-to-end pipeline so you know where delays can occur. Expect variability in early access during holidays because it is policy-driven, not guaranteed. Use the pre-holiday checklist to stay ahead and leverage alerts and buffers to minimize stress. Before we sign off, a quick but important disclaimer. Disclaimer. This content is educational and not financial, legal, or tax advice. Policies, timelines, and features vary by employer and bank. Always verify details with your payroll department and your financial institution. Now, let's close out. Thanks for watching. If this helped you avoid a holiday payday surprise, please like the video, share it with someone who could use it, and subscribe for more practical money insights. Tell us your experience with early deposits during holidays in the comments,